Now, the first thing that I want to say is that recessions are a part of our economic cycle. Period. They have happened in the past and they will continue to happen. But do you want to know the longest period in our modern American history where we have gone without an economic slowdown, without any sort of recession? Think about it. It was before 2020. After the 2008 crash to 2020, February 2020, that was the longest period in modern American history that we have ever gone without seeing a downturn in our economy. 128 months. So before the 2020 pandemic hit, we were due for an economic slowdown. Well, then the pandemic hit, our economy was shut down, and we were forcibly put into an economic slowdown. We were forcibly put into a recession. Well, we were in a recession in 2020, but most people never really felt the real pain of a recession. I mean, we remember 2008, if you were old enough to remember 2008, that was real economic pain. People lost jobs. People had real financial struggles. Now in 2020, yeah, lots of people lost jobs, but the Federal Reserve Bank worked with the government to print a ton of money, more money than we've ever printed ever before. And then this money went out, and some people got this money in the form of stimulus checks. Some people got this money in the form of unemployment checks, and businesses got this money in the form of PPP loans. Other businesses got this money in the form of other corporate government loans. So lots of money was printed and sent out. And we were in a recession, but we were seeing booming sales. We were seeing booming sales at companies like Amazon. Walmart was seeing booming sales, and also luxury companies. Gucci, Louis Vuitton were breaking record sales when we were in a recession. So we were in a recession, but for the mass majority of people, they weren't feeling any pain of a recession. So we boosted our economy in 2020 and 2021 through the help of super low interest rates, through the help of extreme money printing to the max. And when I say extreme money printing to the max, when the 2008 crash happened and we were talking about $1 trillion stimulus plan, people were losing their minds. Well, we did multi-trillion-dollar stimulus plans after the 2020 pandemic, to put that into perspective. And to put it in even more perspective, who was now our Treasury Secretary, Janet Yellen, before the 2020 pandemic, she was our Federal Reserve chairperson. And what she said then was, when we had about $25 trillion, $20 to $25 trillion worth of national debt, she said that this amount of national debt should keep you awake at night because of how dangerous our $20 to $25 trillion worth of national debt is. Well, then she moved to our Treasury Secretary, so away from the Federal Reserve Bank, into our government offices. And when we were around $29 trillion worth of national debt, she was asked the same question. And what she said then was, we don't have to worry about this high national debt because interest rates are so low. This is back in 2021 when interest rates were at rock bottom, the lowest we've ever seen. So essentially what she was saying is, we don't have to worry about these high levels of debt because we have such low interest rates, so our cost of servicing the debt is low. Well, now here we are today in 2022 going into 2023. Our national debt is more than $31 trillion, and our cost of servicing this debt is way higher than where it was in 2021. And it's way higher than where it was pre-pandemic because interest rates have gone up so much. So now the question is, what's coming ahead? And unfortunately, this has become a political question where, Democrats say this because they're in office and Republicans say this because they want the office. Look, this is a financial question. This is not a political question. And what we've seen happen in the past, historically, is the size of the bust is proportional to the size of the boom. When the 2008 crash happened, we had a huge real estate boom fed by lots of debt, fed by lots of adjustable rate mortgages, fed by a lot of greed on the side of banks, and also greed on the side of people, because it takes two people to tango. I mean, banks offered these loans without any education, but people also wanted homes that they couldn't afford. So you had two sides of greed, which then fueled this massive real estate bubble, which then burst, which caused a big fall. Same in 2020. We had a huge dot-com bubble boom where everybody thought dot-com companies were the savior to our economy, that dot-com companies couldn't fail, that dot-com companies were only going to go up. Well, eventually that bubble burst too. And now what we've seen is after the 2008 crash, we had that period from 2008 to 2013 or so where it was just recovery. But then from there, everything grew. Now, it wasn't a massive, huge, quick boom between 2013 and 2020, but it was a steady rise. But then after 2020, when we cut interest rates, we actually started cutting interest rates in 2019 because our economy started to slow in 2019. The fears of a recession started coming in 2019, but then the Fed started cutting interest rates in 2019 to stimulate the economy. Then came 2020, and then we cut interest rates to the lowest level ever. We started inflating our economy with more cheap and free dollars than ever before, and now we really created a boom. The biggest boom in really every asset class ever. We saw the stock market grow at the fastest rate ever in 2020. We saw our real estate market grow at near, if not at, record speeds. We have seen bond markets grow, so much money flow into bond markets than ever before. This is why a lot of people called it an everything bubble, because we saw everything grow so significantly.